Okay, in this video I wanted to address a common question I get, which is, if I have a CFC, so a controlled foreign corp, do I really need to file Form 5471 each year with my tax return? And this is often asked because somebody sets up a foreign corporation and there's no activity, or the company's losing money and they're thinking, well, do I really need to include this disclosure? The short answer is yes. You absolutely still need to file this form with your tax return. So I have one slide in front of us. We'll go through some of the basic rules and an example, and then cover the filing obligations itself. So just a bit of background for those who aren't familiar. A controlled foreign corporation, or CFC, is a foreign corp which is owned more than 50% by U.S. persons on any day during the year. So a U.S. person is anybody that meets this definition here under Internal Revenue Code section 7701A3. And so U.S. people include U.S. citizens and residents. So that's obviously U.S. citizens, and then residents are also includes U.S. green card holders, or also persons who are physically living in the U.S., let's say on an H-1B visa or some type of work visa, and they meet that substantial presence test. So they're physically in the U.S. enough days during the year where they become a U.S. tax resident. And then U.S. persons also includes a domestic partnership. So that's like an LLC formed in Delaware. That's a partnership, is a domestic partnership. Domestic corporations or domestic trusts or estates. So if any one of these persons owns enough stock in a foreign corporation, you might have a CFC issue. Now, what's unique about the CFC rules is they break down this U.S. person definition a little further. So in section 951B, it states that a U.S. person must own 10% or more in order to be classified as a U.S. person for these CFC rules. So here's an example. We have John, Frank, Todd, and Emily. These are all U.S. citizens. They each own 25% of a foreign corp in Cayman. So under the federal tax rules, each of these persons is a U.S. person because they own 10% or more of the foreign stock, right? So each one needs to file the Form 5471 with their return. An example where you might be able to get around this rule, let's say there were 20 U.S. people here. So we had John, Frank, Todd, Emily, Susie, so on and so forth. So we had 20 U.S. people, and they each own, so what would be the math on that? 5%. So if you had 20 people, each owning 5% of the stock, because each U.S. person owns 5% and they don't meet that 10% threshold, you don't have a CFC here. Because the ownership is so diversified where each U.S. person, even though they're U.S. citizens, you've got 20 shareholders, each owns 10% of the stock, each owns 5% of the stock, which is below that 10% threshold, so you don't have a CFC. So no 5471 filings, assuming they're not related or anything like that. Now, you might still have like a PFIC issue or something like that, but for purposes of the U.S. person definition under CFC rules, that would be an ownership structure where you can get around this. So let's look at what are the actual filing obligations. Now, I've highlighted this part here, and it's very, very important. The IRS does not have any kind of de minimis exceptions here. So if you've got a CFC, and you're a U.S. person, you've got to file this Form 5471, even if there's no activity, even if the company's losing money. There are very unique exceptions for what are called dormant foreign corporations, but that really just doesn't apply here. If you've got a CFC, even if there's no activity, you still need to file this form. If you look at the form instructions, and if you look at the Treasury regs under the filing obligations, there's really no way out of this. So even if you have a company that has, let's say, losing money, negative earnings and profits, negative E&P still needs to be tracked, and it's tracked specifically on Schedule J, which is included with the Form 5471. And then the instructions further state that even in cases where you might have a required schedule that has all zeros, so there's no financial data, it still has to be included with the filing. So again, the message here is even in cases where there's no activity or you have a schedule that's going to have all zeros, you still need to be filing this 5471, and you need to be including all the required schedules given your category of filer. So for example, a category 4 filer definitely has the most types of schedules that they need to include. One such is Schedule E for foreign taxes paid. And a lot of times this schedule is included and it's always all zeros because a lot of times CFCs are set up in tax-free jurisdictions, so you're not going to have any taxes imposed at the local level. Doesn't matter. If you got a Form 5471 filing and you're a Category 4 filer, you've got to include the Schedule E, okay? So what are some of the biggest mistakes I see taxpayers make and some other important considerations? Well, again, just to reiterate, the first one is assuming that, if you have a CFC and it loses money, you don't have to do anything. 100% wrong. If you got a CFC and it's losing money, you still have to report on Form 5471, include all the schedules. Again, negative E&P is tracked on Schedule H, Schedule J. You need to track all this financial data. You need to report everything as required under the rules, even if the company is losing money. And then again, just to piggyback that, if the company has no revenue or expenses, still need to file, right? Still need to file everything. Make sure you get these filed because, again, the penalty for failure to file is $10,000 a pop. So every Form 5471 you miss, you're looking at a $10,000 penalty. Not good, all right? Okay, so some other big considerations. If you have a first-year controlled foreign corp, in addition to the Form 5471, you'll also likely need to include a Form 926. So the Form 926 is used when a U.S. person transfers cash to a foreign corp in exchange for stock, right? And so in the year of formation, that's generally what happens, right? You have to capitalize the foreign corp in order to get stock in exchange for that, and so that transfer is generally reported on a Form 926. Some other things to keep in mind: if you have a CFC that's kind of an investment company, and the value of the stock exceeds certain thresholds depending on your filing status, whether you're single, married, whether you live in the U.S., live outside the U.S., you might have to file this 8938. It's a statement of specified foreign financial assets. That's a disclosure where you report all your foreign financial assets, obviously, so things like foreign bank accounts, ownership interests in foreign stock, ownership interests in foreign partnerships, and the like. And then lastly here, if the CFC has a foreign bank account, which it very likely will, right? So you have let's say you have your Cayman Islands company, and then you open a Cayman Islands bank account in that Cayman Islands company name. That foreign bank account, if you as an owner or a shareholder have signature authority over it, you might need to file an FBAR. So FBAR filings are required for all U.S. persons that have a beneficial ownership interest in a foreign bank account, or they have signature authority over a foreign bank account. And so the foreign bank account meets certain dollar thresholds during the year. It's generally $10,000 US or more. You might have to file an FBAR to disclose your signature authority and potentially your beneficial interest in the foreign bank account. So that covers it for this 5471 filing video. If you have any questions, please leave me a comment below. Happy to answer those. And I hope to see you again in the next video. Thank you.